Hello everyone and happy Wednesday. It's your girl, #JLone. Yes, coming at you today because I have another video that I wanted to do for you. So yesterday we talked about, what did we talk about yesterday? So yesterday we talked about how you calculate debt to income, all right? And so today I got a couple inboxes about credit, and so I figured I would do a short little video about credit, and then if you have more questions, obviously you can inbox me. So I got my guy on here, Dan the man. What's up, Dan? All right, so today's video is gonna be the 3 easiest ways to build credit. Now, are there other ways? Probably so, but these are the 3 easiest ways that I know of to help you build credit. What's up, Corey? So these are the 3 easiest ways to help you build credit, okay? So number 1 is my favorite, but lenders are tightening up a little bit on it, so you have to be careful, okay? So it says become an authorized user. So this means that you have to get a person that you trust, and I typically say either a spouse or a sibling, someone that you trust that has good credit, okay? Because you don't want to put yourself as an authorized user on someone's card that doesn't have good credit, okay? So basically what happens is when you become an authorized user, you get history for all of their history. So for instance, I have had my same credit cards since college, okay? So not to age myself here, but since 1998, I have the same credit cards today. So when you talk about how much history that is, I have over 15 years of credit card history from college. So if, let's just say, I wanted to help my family out and help them build credit, if I added them to my credit card as an authorized user, now they get 15 plus years of credit history just like that, okay? The good part about it is you get it just like that. The bad part about it is you get it all. So you get all of the history. So if I keep high balances, if I miss payments, you also get that. So it's very strategic on who you pick for this, because you want to make sure you're picking someone who has good history, because the whole point of adding you as an authorized user is to help you build credit as a whole, or help you build better credit as a whole, okay? So be very careful who you choose. As well, the lender also wants to see you have other credit too, not that you're just an authorized user, because if I add someone to my card, I pretty much don't need to give that person a card. I can just add them to help them. They're an authorized user and I never give them a card. So when I give advice, I say the same thing. Hey, you're trying to help them out. You don't necessarily have to give them access or give them a card to actually use your account. You're just trying to help them build credit. So if you if you are added as an authorized user, then what happens is when you go to apply for a mortgage, we do count that payment against your debt to income, of course, unless the person's willing to provide the fact that they've made all the payments for the past 12 months. It has nothing to do with you, or you remove yourself as an authorized user. So obviously you don't want to put yourself on and then erase yourself from authorized user, because it may change your score, but that's always something that you can do. So just keep in mind, choose the person wisely, and don't choose someone where the payment is just extreme. Small credit card, something they've had for more than a year. So you want more than 12 months of history, because you're trying to build a history. So once again, be strategic on who you choose. So that's number 1. You can become an authorized user immediately. Whatever credit they have on that card, you get credit for that card. So again, for me, if I added someone, they'd have immediately 15 plus years of credit card history, just like that, because that's how long I've kept them, okay? So number 2 is to open a secure bank credit card. So let me move out the way. So open a secure bank credit card. Now, what's the difference between a secure bank credit card and an unsecured bank credit card? The reason why we say secure bank credit card is because some people don't like credit cards, one. And then sometimes people don't qualify for an unsecured credit card. So secure bank credit card is like a debit card. You put your own money on the credit card, but it gives you credit card history. So this is the best way, and the majority of these are not credit based. So if you don't have good credit or you have great credit, these will help you establish credit, okay? The most important that you want to do with this secure bank credit card is you actually want to use the credit card. There's nothing worse than having open credit that's stagnant, that you don't use. It doesn't make sense to have it on there because zero reports no balance. It's not going to show that you're using the card. That's not going to help you build it. So you definitely want to use the credit card. Now, I say to save all of your shopping for after you buy a home, you want to use this secure bank credit card for something you do weekly, which is maybe gas, maybe you're a Starbucks drinker. I don't, definitely recommend spending that much money on coffee if you're trying to buy a home, because you could save that money and use it for your purchase. But if that's you, and you buy something weekly, or maybe you take your wife or your husband out to dinner once a week, you use it just like that. Just a little bit, enough to show that you're using the card, put more money, pay it back down. The key to credit cards is 30% of the limit, okay? So you don't want to exceed that. If you got a $300 card, you never want the balance to report over 30% of that, which is $90. That's very, very key in helping you to build your credit, because if I'm gonna go to the next part so you can see the fastest way that you can decline your scores. So we talk about the 3 easiest ways: authorized user, open a secure bank credit card, and then use the secure bank credit card. Very, very key. Now, the fastest way to decline your scores, because it's very important that you know both sides of this, is one, late payments in the last 12 to 24 months. I pull so much credit on a daily basis that there are lates right now this year. It's going to be very, very hard for you to qualify for a mortgage because it dings your score so bad. It's detrimental. Not only that, think about it. You're asking a lender to lend you hundreds of thousands of dollars to buy a home in promise that you're going to make your payments. So if you come to us with late payments right now, how likely do you think it's going to be that you are going to get approved for a loan? Very, very slim. So no late payments in the last 12 to 24 months. That's detrimental to your score, okay? Number 2, overutilization of credit cards. We just talked about it. If you have credit cards and you're maxed out, or you're almost maxed out, or you're over the limit, that dings your score drastically. Credit card utilization, I want to say, is about 35% of your credit score. So you will see, I see it on a daily basis. This is the easiest thing to change too. So if I pull credit and someone's score is not quite there, I look for one specific code, and that code is a code 10. And that tells me that the proportion of the balance to the limit is being overused, okay? So I go straight to the credit cards, and I'll tell the borrower, hey, you need to pay this card down to get the points necessary for you to hopefully qualify for a home loan, okay? So once again, the key to credit cards, 30% or below of the limit. Do not close any credit cards, especially if you had them for a long time. A lot of times you get the offers in the mail that say, hey, 0% interest for 12 months, transfer your balances over here, and you're like, yes, I'm so tired of this 18 or the 17%, I'm going to transfer it all over, and then I'm going to close that card. Well, you just hurt yourself, because if those cards you close have 15 years of credit history, and now you open a new one and transfer the balance, now how many, I'm going to leave it open, how much credit history do you have now because you just closed those cards? Not much. You just have 1 month of credit history because now you close those cards. So don't close your credit cards. Make sure you use them at least once a month. Be active with them. Make your payments on time, and of course, keep the balance under 30%. Don't pay to zero, because zero has no memory. Now again, I'm not talking to my 800 credit score borrowers. I'm talking to clients who, or just people in general who are looking to build credit or who are looking to rebuild credit. This is key to you building a great credit score, okay? And then the last thing is collections. Collections in the last 12 to 24 months. That's huge as well, just as much as a late payment. The big thing about late payments and collections is the only way to improve your credit score is 1, time away from delinquency, or 2, the deletion of that collection or that late payment. So the latter, number 2, isn't the easiest thing to do, because not every creditor is going to say, oh, okay, you were late and now you're on time. I'm going to remove that late, or I'm going to remove this collection. Now, can it happen? Yes, sometimes if you've had a good, long established history and you call them and like, man, I missed this by accident. Is there any way you can help me out? Maybe they will. But the chances or the likelihood of that are very slim to none. So you want to make sure that you don't have any lates or collections, again, because of 2 reasons. The only way to get better scores from them is time away from delinquency or deletion of the actual late or collection. So once again, the latter is very, very hard for you to get. So always make your minimum payment. No one tells you right now you have to overpay. If the payment's $21 and you're tight this month, pay $21. Always make sure that you make that minimum payment, okay? So, any questions on here that you may have, I'm super happy to help you. So again, 3 easiest ways to build credit: become an authorized user, open a secure bank credit card, use the secure bank credit card, but keep the balances at 30% or below of the limit. And then the fastest ways to decline credit scores is late payments in the last 12 to 24 months, over-utilization of the credit card. So again, reporting balances over 30% of the limit, and then any collections in the last 12 to 24 months. These are huge, 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 huge. Look, I want everyone to buy a home, okay? Whether it's in 2019, 2020, or 21. But you got to start now. So you got to accept some type of accountability and some type of responsibility. Hey, everyone has a story. Everyone has a past, right? Whether you were young and immature, whether there was divorce or death, it doesn't matter the story. What matters is you hold the power to change your circumstances every day. And in your mind, if you have told yourself, I want to be a homeowner, but the one thing that's holding me up is my credit, you can change that today, okay? Seek the person that's going to help you best. It doesn't necessarily mean you need credit repair. Sometimes you just need the advice necessary to help you take it to the next level. Sometimes you just need someone to tell you you can do it. So I'm telling you today, your girl #JLone is telling you that you can do it today, okay? So I'm going to address some questions. If you have anything, inbox me. Of course, you can text me or call me at 817-601-5456. As always, it's my pleasure to help you. So Corey, what are the benefits of going with a loan officer versus a preferred lender? Someone brought this up at work today. I'm not really sure I understand the question, because a preferred lender has loan officers that work for the preferred lender. Now, you may be talking about a builder, and a builder typically has their own lender. And that's just a personal choice. There are perks that come with that, but I would always say to seek outside, because nothing in life is free. And I'll keep this video very pleasant. I have my moments with builders, lenders, and I don't necessarily agree with a lot that they get away with on that side. But I say, as far as a loan officer is concerned, you want to choose someone that you like, and someone that you trust, and someone that you know is knowledgeable, because this business is very hard. And if you choose the wrong loan officer, it could make the difference in whether you even close on that loan. And believe me, 13 years strong in this business, and I have gained a lot of business from other lenders who could not close the deal on a deal that could be closed. So I say that it's very important to make sure that your loan officer is educated. Is she smart? Is she going to help? Oh, I keep saying she because I'm a she, but is she going to help you? Are they going to hold your hand? Do you understand the process? Because a mortgage is a lot. You're signing your name on a dotted line for something that you're going to owe hundreds of thousands of dollars for. Do you really understand everything that you're signing? Okay, so if you don't, then I don't want to say you didn't have a good loan officer, but you just didn't have a great loan officer. You should truly be comfortable with understanding the majority of what you're doing when it is you're signing a mortgage. It's more than just, yeah, you owe this for 30 years or 15 years, here's your payment. It's more of, did they really explain everything to me from beginning to end? Did they show me all of my options, or did they just tell me FHA? Or did they just tell me this? Make sure that you choose a person that you feel is going to really help you throughout the process. Okay? So yes, on a new build, so I did answer that. I always say to get a quote outside, and I'll say this one thing. A lot of the times, the builder's lender will give you the incentive to use their lender of paying your closing costs or paying for upgrades. But I encourage you to take that quote and send that quote to a loan officer that's not a builder, and just kind of see what they can offer. Because a lot of times they'll say, hey, we'll offer you $5,000 towards your closing costs, but the lender charges 1% origination. So if it's a $300,000 loan and 1% origination is $3,000, well, them giving you $5,000, they're really not giving you $5,000, they're giving you $2,000. Whereas you'll have some lenders that don't charge origination. So like I said, you always want to get at least another option outside, because remember, they own their mortgage company, which means there's incentive to make you want to use them. So that's really all I can say. I see some really great deals out there. I see some really not great deals out there with builders, lenders. So it's just sorry about that. Okay. Sorry about that. My kids. But all right. So if you guys have any questions, inbox me. Remember, it's your girl, #J. I'm sorry, again, check me out on LinkedIn, check me out on Facebook. Go like my business page at VJ Loan today. You'll see all of these videos. I have at Jeanette the Loan Officer, as well as Instagram as well. So if I can help you, it's your girl, #J Lizzle in the building. I'm happy to help you, okay? Share this video. Somebody needs to see this. Somebody wants to buy a home, or maybe somebody just wants better credit and they don't want to buy a home. This could possibly help them, okay? I'll talk to you later. Bye-bye. Mwah!